Hey traders, welcome to Charts and Coffee. Hope everyone is having a great, what is today? Thursday. Great. You think I know it's Thursday because we've got, I'm blanking out on the days. Um, Hope everyone had a great Valentine's, relaxing dinner, whatever movie. What did we do yesterday? Watched the extended cut of The Martian. That's what we watched yesterday. What a great movie. Who's read the book? I've been dying to read the book. Uh, I watched the extended cut. It was really, really good. Hope everyone had a wonderful evening. And regardless, we are embarking on a couple of interesting days the next 2 days. Number one, and maybe this is my own bias, we've got a webinar tonight. And what is this webinar about? I'm going to tell you right now. We're going to talk about the trades that we have taken in the Sector Secrets Mastery in January, and I'll probably start to talk about February as well, depending on time. We're going to go through what we're doing, how we're doing it in terms of, well, I'll tell you right now, if you're a fan of Charts and Coffee, you know this. Focus on trends, right? Focus on trends. Focus on outperformers. Look for the alignment of index sector stock. I'm a retail trader. I'm rooting for other retail traders. I don't give a rip about hedge funds and all those folks on television or whatever else. I am here to manage my own money and, more importantly, manage risk. We'll touch on all that today because the key is becoming consistent, and that's the URL. If you haven't registered, do so. We'll be live tonight at 8. The replay will go out shortly after for those of you that can't be there live, although definitely be there live because you get the nice live webinar feel. It's like DVRing a football game. Does anyone really do that? You know, it's nice to watch it live. And the other thing that I wanted to talk about, and it's really very much what we do in the mastery, consistency is account growth. It's not one big trade from a stock that just had a great month or great couple of months. How do you find stocks consistently that will grow your account? We're going to touch on all that, as well as actual trades that we've been taking in the mastery, because those are my trades, right? That's what we do. What I'm doing, I relay to the members. So I'm really excited for this, and hope that everyone has, at this point, Sharpie penned that into their calendar books. Let's get to it. Let's get to it. As always, gang, phone lines are open for your requests, whatever symbols that you might have. Let me know. Let me know what time frame you're looking at. Let me know if you're in the position already or not. Let's go ahead and dive in. Now I'm going to start with the S&P, and you notice I've got the 5-minute on the left. I've got the 1 hour in the center, the daily on the right. That's it. That's it in terms of time frames. I'm not scanning 20 different time frames. You know what I love the best? When 1 month, traders decide to use a 5-minute. The next month it's a 30-minute. The next month it's 4 hour. Oh, the next minute's a 2 hour. Who can keep up? I know I can't, right? So we find a time frame for the task, right? My 5-minute charts time frame, its task is day trading. The 1 hour, short-term swing. Daily, longer-term swings. That's it, right? Very simple carbohydrate right here. So if I take a look at what's been happening this morning, you might think, Rog, what is this? It's the data. We've been getting a lot of data, and you can definitely see in the data and see in the price reaction to the data. The equity markets are very, very much, as they say, walking on eggshells. And we could really go back to the Federal Reserve's, well, Jerome Powell on 60 Minutes. He went very public with a very plain-spoken message. We're not sure we're going to cut rates soon, but we are going to cut rates. I mean, that's the takeaway, right? Are they going to cut rates this year? Yes. What are they waiting for? To make sure they're not jumping, too far ahead of this inflation issue. Is it really dropping? Can they see the steadiness in the drop? And then they'll cut. That's what they're waiting to do. That's why equity markets are up. And by the way, despite the roller coaster in the equities, ES, NQ, YM, RTY futures, take a look at the bond market. And I've been mentioning for a while, even though it's not an easy, clear environment, we want to be playing, if you're looking longer term, we want to be playing for the long side. If we think about what a bond futures contract is, right now, this is the H contract. H is not going to have as much clarity to the rate cuts, which is a March contract, right? To the rate cuts as, say, the June, which is the M contract, or the September, which is the U. Now, Rog, why does that matter, this MU stuff? Not micron. M is in June, U is in September. Why does that matter? Because as the June contract ends, expectations are that we will have seen a cut in either May or in June. By the time we get up to September, rates should already be lower by either a quarter or half a point. And so when we look at these contract days, we want to look at the way in which March might have a slightly higher yield than June, and June might have a slightly higher yield than September, and December should have the lowest yield of all, as we are looking at mapping out via these futures contracts, a long bond, what we anticipate the Federal Reserve doing, right? The same thing can be said for the Fed fund futures that are a direct contract that trades what we think the Federal Reserve is going to do with the Fed funds rate. So everything is pointing to it's coming. The S&P, the NASDAQ, the Dow, the Russell, they're kind of impatient. I get it. We talked about how indices can be kind of like a tantruming 3-year-old. Give it to us now. We wanted it yesterday. We're stuck in a range, but this is still very bullish. So please, 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 I've been cautioning everybody, not just recently, but for 14 months, do not commit to longer term expectations of downside, please, right? After we get a sell-off like the 12th and the 13th, everyone's saying, oh, this is it. Until here we are, taking back much of that move yesterday, right? So please, the long side is the path of quite literally least resistance. All right, so let's get to it. As always, your questions are the best part of the show. So let's find out what we've got. And again, quick reminder for those of you that might have just logged in. If you're liking what you're seeing in Charts and Coffee and say, Rog, okay, I like what you're saying, but how have you been doing? I agree. That's a great question. And I don't mean about 3 of my best trades from last month. Spare me. What we want is consistency, is account growth. We're going to talk about that tonight. All right. So simpletrading.com/becoming-consistent. And let's see, do this, not that. I like that, George. We have a little saying in the room, trade this, not that. And that's the idea of relative performance. What you trade is more important than how you trade it. Yes, absolutely. I love it. What are my thoughts on ARM? Well, let's take a look. Candace, the first thing I'm going to look at in ARM, and really what would precede this, is where is ARM within the broader averages? My preference is for stocks and sectors that are influenced or weighted in the S&P, the NASDAQ, the Dow, the Russell. There's more organization in those names. In other words, if we have a stock that's weighted in semiconductors and semiconductors are weighted in the NASDAQ, we can see the alignment better. There's better chance for follow through. Case in point, NVIDIA. So that would be the first step. But barring that, it's a pretty bullish environment. It's made a parabolic move. Candace, I'll tell you this. Most traders like a chart that looks like this. It's just taken off, right? I will tell you, that is not what I teach. That to me is showing up to a really great Friday night party in high school after they've called the cops. You want to be there before. And so case in point is Disney. We had a long position in the Sector Secrets Mastery in Disney. I want to take advantage of that incremental, organized move higher. And this, granted, was a move on earnings, but it's the same idea. Any sudden moves to the upside cannot be the reason I'm interested in something. So for that reason, really alone, Candace, I'll put something like that on the back burner, right? I'm not a fan of playing the gap up or playing the market that's just suddenly taken off. And by the way, here's why. They're very sometimes volatile. Sometimes they can be illiquid at those heights, which is to say, who's going to be there to support a pullback? And a lot of times you find out the hard way, nobody. And the other part of it is, if all I'm doing is trading things that I'm not familiar with because they've made a certain kind of price movement range, there's no consistency. A lot of traders here will know we trade the same things again and again and again because they're part of a group of stocks that are part of sectors that are heavily weighted in the indices. And there's consistency in that. The net that we cast is in liquid names that have consistent movement for the most part. So those are just slight differences in the way that I look for opportunities. Yeah, there are stocks that are just having their meme moment, they're having their rip higher, and that's great. I'm happy for the people that are in those things. But if that's what a career of trading is built on, finding those needles in the haystack, that's a tough way to grow an account consistently without the roller coaster PNL, right? Nobody here has that. Yeah. I know a lot of folks say, Rog, sometimes I'm up and then I give it all back, and then I'm up and I give it all back, right? Who said, oh yeah, Rog, you just described my account. That's what we want to avoid. I know it feels great when it moves higher, but I know a lot of folks are suffering with the roller coaster Dramamine P&Ls. All right. What are my thoughts on QQQ? Buy the dip. Same thing that we've been talking about for a long time. Buy the dip. What's the dip? We'll talk about this a lot more in the webinar, but the dip is volatility-based support. Right now, mean reversions we're not getting there, right? For me, a mean reversion is the 34 EMA wave. We're simply not getting there. Prices are a little bit more, I don't want to say extended to imply that they're too high. You do know, right? Everyone here in this rooms, I should say, knows that there's no such thing as too high in an uptrend, right? I don't know where that notion comes from. Uptrends are inherently imbalanced. So I'm waiting for a little bit of a pullback to a volatility level to get long. Buffett sold 1% of his Apple. I'm certain that's very little of it, but Apple is actually beating. Apple is not one of the stocks that's been on our radar. It's actually next to Tesla, one of the less magnificent stocks. And when you know how to do trade this, not that, when you know how to do that relative performance, you'll realize Apple's really not been on the radar. That said, it is looking interesting around the daily price movement range, the 200 propulsion. I'm sure we'll talk about that more in the mastery this morning. All right, question on Netflix. I added Netflix to the video I did on Tuesday. Netflix, Nvidia, NASDAQ. Netflix was a cool example of why stocks move the way they do on earnings. And it's not because of previous history. That's not helpful in the least, right? Whatever we did the last earnings release is what we'll do the next. That's not it at all. What it is where is company guidance or expectations in relation to a whisper number? Yesterday was a great example of whisper numbers at work in crude oil. It's not about what we expect in terms of the EIA expectations, right? It's not about Netflix and what we expect in terms of company guidance or even Wall Street expectations. It's that whisper number. And getting a good whisper number is the key. If that whisper number increases in the 4 to 6 weeks before earnings, you've got a stock that's going to continue to rally into earnings. If you've got a very high whisper number in front of earnings, and I mean immediately in front of earnings, think of what that stock has to do in terms of earnings per share and revenue to beat and move higher. So there are thresholds for understanding that. Now, I bring up Netflix here. I think it was a question, right? So Rob, what do you do with something like Netflix? I'll tell you. And sadly, this breaks my heart. If traders are looking for opportunities to get long, please don't let yesterday's action be why you want to buy Netflix. Please, if you're bullish in something, it's because you're looking at a list of stocks consistently. We're going to say that word a lot, right? Consistently. So Netflix should be on the radar consistently. And then it becomes a daily price movement range opportunity. You'll say to yourself, let everyone else scramble in and buy at higher highs and, FOMO Momo their way. We call them FOMO Momo bozos, by the way. And not to insult, but it's just to remind ourselves not to be in that group. They're going to chase that higher. And maybe it'll work sometimes, right? But what's the calmer way to do it? Find the trend, find the pullback, define what a pullback is, and go from there. Now, I'll tell you, of all the stocks that I could focus on, again, kind of going back to Candace's question and showing you Disney, I'm not going to be a big fan of something that's got a big hole in the chart where the bulk of the movement has been the trend, I should say, has been a gap. Meta's another great example. I'm not going to be really enthused about, see that hole in the chart? Disney had it, ARM had it, Netflix had it. Be very careful. And once again, for all that is good and holy, please do not try to short, right? This is not about, oh gosh, Meta's too high. It's an uptrend, right? It's an uptrend. So what we want to do is buy the support, and there's your automated Darvis. So those are the things that we want to focus on. As far as him selling it, beating, think about it. Think about Apple in terms of the bullishness we saw in ARM or Meta or Netflix. Apple just doesn't have it, right? So thanks for the question. Next up was bots telling me snow. Okay, let's jump on over there. That's a nice steady uptrend on the daily, right? Is it a nice steady uptrend on the hourly? No, it's a little bit choppier. I don't have any skin in the game in snow, but I will tell you this: wait for a pullback. It could be a gap close. It could be a 50 or a 618% retracement of a last major move. You might say, Rog, how do you even do that? I'll show you. All right, a last major move would be the last minor low to say minor high, and then you look for a pullback of about 50%. That's it right there at 208. Okay, then we moved up higher again. Minor low to minor high, your pullback right there, 50%. If you want to stair step with something with a last major move, learn how to properly draw Fibonacci retracements. They're not difficult. This is not some kind of mystical thing. And by the way, Fibonacci is not a trading tool, right? Fibonacci is actually far more important than that. It is a mathematical rule of the contraction and expansion of nature. When applied to a chart, it's the contraction and expansion of our nature, right? You and me. So find those last major moves, minor low to minor high or minor high to minor low, and pull the Fibonacci level. And then usually I'll focus on the halfback, as they call it, the 50%. All right. So that's really it right there. Okay, next up is, do I have any thoughts on SMCI? I know it's been on a tear, gang, which is cool. Have I had any pullbacks? Not any of use. This is a Momo trader's paradise. I get it. This is also, I know there's a lot of folks in SMCI, so I'm just talking about myself. I don't want my career to rely on a stock that suddenly goes from 300 to 880. Awesome move. By the way, I'm all for those kinds of setups. Not to be, just to give you an example, I'm in Bitcoin from about $440. I get it. I get the idea of trying to find something before that thing happens, right? This was not on my radar, and I'll be frank, it still isn't on my radar, right? It still isn't. It's having a great run. Awesome. Folks that are in it right now, excellent. Enjoy. Do I have any thoughts on it? Yeah, RB, of all the things that I could do to help my traders in the mastery grow an account, I'll tell you, I'd rather put them in Disney. I'd rather put them in GE, right? GE is going to move in a far more predictable manner than SMCI. Not that there's anything wrong with SMCI. It's just having one of those great, it reminds me of GameStop back in the day. It's just having one of those great moves. And traders who like to trade momentum are going to do great, which means higher highs are going to beget more higher highs because everyone's scrambling in. I'll tell you, I'd rather play GE. I'd rather play American Express, right? And then also remember, those are very expensive stocks and options, SMCI, right? And then keep an eye on the liquidity. I know it looks great, but here's the great thing about, if you're in it, enjoy the ride, right? It's a gift. It's not how you build a career. And I know that no one's going to believe me, or very few will. That's okay. They'll realize that it's the boring stuff that grows an account. It's not the stuff that's having Mardi Gras right now, right? So, be careful. And also remember, we'll talk about this tonight. A part of your risk in a trade is, what are you paying for the option? So if you're getting into expensive options, you also have outsized risk. So yeah, be careful. But again, if you're in it, enjoy the ride. Enjoy the ride. I'll stick with my boring stuff that's scalable and affordable that I know repeats. You think there's going to be an SMCI next year, right? And what's it going to be? Good luck finding it, right? And I think a lot of traders are waiting for Tesla to do that thing too. So add to the group of things that people want to behave like they did once upon a time, Tesla in 2020 and SMCI in 2024. You've got to find that stock because it's not going to be the same one. Again, my 2 cents. And again, I'm rooting for those folks. I hope it goes to the moon, right? But I'll tell you this, before we leave, let me show you this. This is what I mean. Proof's in the pudding. Boring. If you don't like boring trades, if you're in it for the rush, if you're in it for the action, I'm going to save you a lot of time. I am not the trader for you. I am not. I'm not going to be scanning meme stocks. I'm not looking for high flyers. This is what we've been doing in the Sector Secrets Mastery. All right. I'm going to get into this detail later on. I actually started the year negative. I was actually treading water. We actually, our first few trades of the year were little losses. And then we started to really run up. And then I was telling Bot, I actually did make a mistake. This is an outsized mistake because I actually still had, I think, 4 contracts of Disney when I should have closed it. But I'd rather be lucky than good. And it's amazing how lucky you can get in a trend. But anyways, I'll be talking about this tonight. All right. So in the meanwhile, gang, enjoy the rest of your day. I'll see my mastery folks in, now. And if you're in the Simpler Central room, I'll see you at 10:30 Eastern. Be good to each other, gang. I'll talk with you soon.